Hello and good afternoon. I'm 𝐊𝐴𝐵𝐿 𝐺𝐞 reporting live from 𝐊𝐶𝐞 studio in Sydney. It's lunchtime here and time for the Mid-Market Pulse. In today's show, we'll take a look at the overall Australian share market performance by the mid-session trade. We'll also explore the biggest winners and losers of the day, such as Flight Centre, Redbubble, NEXTDC, Megaport and more. Lastly, we'll focus on stocks such as CIMIC, Sigma, API, Wesfarmers, Ampol, Rex, Synlait Milk and many more that have grabbed the headlines for today. So getting started, the Australian shares were trading near day's high by mid-session as investors shrugged off the uncertainties surrounding the potential default of China's real estate giant Evergrande Group. The improving COVID-19 outlook and rise in commodity prices also boosted investors' appetites for riskier assets. The rally in blue chip energy, mining and banking stocks also supported the market rally. The benchmark index was trading 1% higher by lunchtime. 8 of the 11 sectoral indices were flashing in the green zone. Energy, material and finance sectors were the biggest gainers, while healthcare, tech and consumer staples declined the most. The energy sector was the best performer with a 2.5% gain, owing to a rise in crude prices. The crude oil rose to a near 3-year high on Monday amid supply disruption in the United States. Brent crude oil futures for December delivery last traded up at 1.67%, whereas West Texas Intermediate crude oil futures for November delivery rose 1.64%. Index heavyweights Woodside, Oil Search, Beach Energy and Santos were among the top gainers. Materials sector also witnessed a surge in buying following a spurt in iron ore prices. Iron ore futures were up 1.4%. Sectoral leaders BHP, Rio Tinto and Fortescue were trading high. On the flip side, healthcare sector declined 1.2% by mid-session. It was followed by tech and financial, which traded lower with modest losses. On the COVID-19 front, New South Wales reported 787 new local coronavirus cases and 12 deaths in the past 24 hours. Victoria continued to register higher daily cases with fresh 705 infections on Monday. Next, we'll focus on the top gainers and losers by mid-session trade. The top performer on the ASX pack was Aussie leading retail travel outlet Flight Centre Travel Group with a 9.4% gain. Some of the other notable gainers were online business Redbubble, financial services company IOOF, resource firm Iluka Resources and online travel business Webjet. On the losing side, tech firm NEXTDC topped the losers chart with a 3.1% loss. Some of the other worst performers were agricultural business GrainCorp, investment management group Pinnacle Investment, software business Megaport and healthcare firm Mesoblast. On this note, let's move on to stocks that grabbed headlines for today. First, engineering conglomerate CIMIC shares were trading 0.7% higher after its group company secured a contract extension. The group's UGL has bagged a contract extension worth $150 million from Australian Terminal Operations Management, a joint venture between UGL and BP. Under the contract, the company will provide asset management and project-related services at BP fuel terminals across Australia. Moving on to the next big news, Sigma Healthcare shares climbed 0.9% after the healthcare firm launched a takeover offer for Australian pharmaceutical industries. Boosted by the development, API shares jumped nearly 5%. API, Australia's largest wholesale distributor of pharmaceuticals, has received a proposal from Sigma valuing the company at $773.5 million. Under the cash and stock deal, API shareholders will get 35 cents in cash and 2.05 Sigma shares for each API share, which implies a value of $1.57 per API share. API shareholders will own around a 48.8% stake in the combined entity. Last week, API received takeover bids from retail conglomerate Wesfarmers worth $1.55 a share, slightly lower than Sigma's offer. And now it is time for a short break, but stay tuned on 𝐊𝐶𝐞 TV as I'll be back with more on the trending market updates.
Property by 𝐊𝐿𝐼𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐼𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐼𝐴.
Hello and welcome back. Rose Jacobs here, live from Sydney, and you're watching the mid-market commentary. Let's look at some more stocks that grabbed the market's attention today. Shares of Synlait Milk climbed 3.5% after the milk powder maker appointed a new CEO and reshuffle of its board. The company has appointed current Miraka CEO and former Fonterra executive Grant Watson as Synlait's new chief. Like many dairy companies, Synlait has been hit hard by the pandemic, which has stymied demand for infant formula from China. The company expects to return to robust profitability in the 2022 financial year. Moving on, shares of Australian petroleum company Ampol rose nearly 1% after the energy firm got a 2-week extension to firm up its takeover bid for Kiwi Group Z Energy. The original 4-week exclusivity period has been extended by a further 2 weeks to enable outstanding matters to be addressed and to determine whether key transaction terms and documentation can be agreed, according to Z Energy. Last month, Ampol proposed a $3.78 per share offer for the dual-listed Z Energy and received due diligence and exclusivity. Z Energy shares were trading 0.9% lower at $3.34. Next, shares of Regional Express jumped 5% after the country's airline extended the suspension of its domestic operations and some regional services through to the end of October. The decision has been taken in wake of the current rate of infection as well as the announced intentions of the various state governments concerning lockdowns and border closures. The ASX listed carrier flies to around 60 regional and rural destinations, and earlier this year had 6 Boeing 737 jets to fly between capital and major cities, including the lucrative Sydney-Melbourne route. Up next, shares of Eagers Automotive were up nearly 1% as the stock of the automotive retail group traded ex-dividend today. An ex-dividend date is when investors must have purchased a company's shares to be eligible for the upcoming dividend. The board of the company had declared a full franked interim dividend of 28.4 cents per share. Eligible shareholders can expect to receive the dividend distributions on the 15th of October this year. And lastly, shares of software business ReadyTech Holdings rose over 4% after it announced the strategic acquisition of AVAXA. The company offered a total consideration of Australian $2.2 million, which was funded from the cash position. The acquisition will help expand ReadyTech's presence in the enterprise education market. AVAXA offers student management software services to Australia's leading enterprises. Well, that's a wrap for the show. Keep watching 𝐊𝐼𝐴 TV for more trending market updates from Australia and around the world. I'm Rose Jacobs, and thanks for tuning in.